All right. Okay, so just going to start welcoming people into our seminar today. We'll give everyone a moment to trickle in here. Sharice, if you could be so kind to let us know when we have people in the forum.
And we are now officially live on YouTube.
All right, that's great. All right, YouTube. So hi, everybody on YouTube or Instagram or on live that you might be seeing us. I'm Shelly Pratt. I'm a real estate agent with Fulcrum Residential, and I'm going to be moderating today's discussion. And we're going to have some great information for you about financials and talk to some experts. My colleagues, Temi Akoji and Tom Kavanaugh, are in the room and on the screen with me now. And then we're going to welcome in some experts, Michael Kilner with Agent CFO, and a chat with an amazing title attorney, Katie Griffin, a little later in the program. So as everyone is arriving in, if you could do us a moment and just hop into the chat and let us know where you live. Let's get some engagement here. I'd absolutely love to know where everybody is currently residing.
Or where you're licensed.
And I'll get your license too. I thought I'd start them off. All right, where do you live and where are you licensed? Where do you conduct your business? I'll start. Let me go first. I live in Washington, D.C., and I am a licensed realtor in D.C. and in Maryland. Almost 95% of my business is in Washington, D.C. Temi, how about you?
I live in Maryland, and I am licensed in Maryland, D.C., and Virginia.
Tom,
and I grew up in Northern Virginia. I've lived in DC for 25 years now. Most of my business is DC and Virginia. It's slowly but surely becoming more and more like Capitol Hill based.
Amazing. So what we're going to do here, I'm going to ask for you guys to stay involved with us. Throw your messages in the chat. The only way we can make this an interactive opportunity to answer questions you have is if you are commenting through the platform that you are watching, and we will be monitoring that and bringing your questions to stage. So please, don't hold back. We want to hear from you. I would absolutely love to know just a little more details, like how long have you been in business? And as we learn more about you, if you hear something you really want to hear more about, let us know in the chat. That's the only way we're going to keep this moving. So it's individual for everyone on this session. So real quick, I would like to know a little bit more. Temi and Tom, you are my colleagues. I know you guys very well. We spend a majority of our days together. Temi is a seasoned agent. She's been in real estate for over 17 years and is a top producer in Maryland and DC. Temi, is there anything else you'd like to tell us about you?
No, I'm just happy to be here.
Great. Well, we're happy you're here too. All right, Tom, a little bit.
Temi sells 35 to 40 houses a year on average, on a pretty consistent clip. She's one of the most productive agents on our team, probably next to Ty, or they're right in there together. I think it's worth saying that Temi sells a lot of real estate.
Absolutely. Yeah. And might I add, Temi is beautiful, sophisticated, and just a fantastic agent. She is one of the most, I'm not joking, energizing people you'll ever meet in your life. And she's a great real estate agent to have in your corner. Tom Kavanaugh, you are one of the founders and owners of Fulcrum. You live in DC. You've got a great family with 2 kids. You've been doing this for 25, 30 years.
Mm-hmm.
Tell us a little bit about you and your business.
Well, that's it. So I've been in business for 25 years. We started Fulcrum 12 years ago now, something like that. We've got 18 agents on the team that sell a fair amount of houses every year, anywhere between 200 and 400 houses. Pretty proud of what we built, and it's pretty exciting. And we've known Michael Kilner, who's our featured guest today. He ran our books forever. Known him for a really long time. He managed our books at it.
That's right.
Yeah, it's Shelly. Someone wanted me to let you know I'm Washington Post famous.
Oh, that's true.
You are Washington Post famous. Yes.
Thanks.
Temi was featured as an article in the lifestyle section of Washington Post. So it was pretty great. Okay, let me remind you guys, we do have a raffle. So we are going to be raffling off 3-month membership to Financial Gym. You must hang around and be present at the end of this broadcast. So hang in there. It is a fantastic product, and it is, tell me, what's the price value of this package?
It's over $300. So Financial Gym is a great financial resource for holding you accountable to your finances and your financial goals. And we'll play something at the end to talk a little bit about it. But it's helped me to be able to get on the journey of even purchasing a home. So I was with Financial Gym when I purchased the home that I live in now. So we want to offer that to you guys. So it's a gift to you guys. There's no catch. It's just a raffle. Yeah.
Mm-hmm. And fantastic.
Sponsor of that. Sorry.
Universal Titles are sponsor for that.
Mm-hmm.
Amazing. Well, thank you, Universal Title. Totally appreciate it. So one more time for anyone who's like just joining us, this session is specifically for real estate agents. We're going to talk about like finances, your taxes, tax strategies, what to do if you've gotten a little bit of tax trouble or you're behind or don't know what to do with your business. So just keep that in mind. We can talk agent to agent here. We can use lingo. This is specifically for us in the industry. So let's dive right into it. We specifically called this session
Just before you jump in, I just want to let everyone know that we can absolutely see all your comments. For some reason, they are not linking. So I just want to let you guys know that we can see them. And for some of the answers, Virginia Georgioff says Maryland, DC, Virginia. Torrance Sinclair says Maryland. Shantiria says North Carolina. Shemaya says hello from Delaware. Patrice says Maryland and DC. Torrance Sinclair says she's going on her fourth. They're going on their fourth year. So yeah, just want to let you know.
Awesome. Thank you. Yeah, Sharice, I'm not seeing those comments. So I would love for you to be on the standby and hop in with those comments and share them in real time if possible.
Absolutely.
Tammy, did you have something to add?
No, I just thank you guys all for coming. Thank you all for being here and just making an investment into your financial future.
Absolutely. Okay, so now I know the chat feature is working. If everyone can go in one more time, pop in there. What are you looking to get out of this seminar? So if you can give us a bit, we're going to let Temi and Tom talk for a moment, and then we'll come back and make sure we recognize all of your comments. What are you looking to get out of this session today? Okay, so we specifically call this session the good, the bad, the ugly of real estate taxes. Again, as a realtor, this is not what to do with your rental income or your 1031 exchanges. We love those topics too, but this is not that session. This is you're an agent, you are running a business, you owe taxes. How do you do that? What to do if you put your head in the sand? What to do if you don't know what to do next? And we've got a professional walk us through that. So our good friends Temi and Tom here have had some ugly experiences with their real estate taxes, and they're willing to share their experiences. So Temi, would you like to go first, kind of share what your ugly moment was in taxes? How did you find yourself in this predicament, and then what did you do to solve it?
Sure. So my experience was I was a real estate agent that was filing taxes every year. So I was every year file taxes. I don't think there was a year that I didn't file taxes. My issue was that I just kept, I wasn't putting taxes away. I wasn't paying estimated taxes. And I just kept like going on payment plans for taxes to the point where it just became insurmountable. And I found myself in 2019 realizing like I just owe way too much in taxes. I can't just stick my head in the sand and just pretend like that it doesn't exist. And I reached out to some amazing agents in our company in Keller Williams, and I just simply asked like, hey, I think I may need to file an offer and compromise. Do you know of anyone? And someone actually referred me a tax professional that did offer and compromises. And so I found myself during COVID having to do an offer and compromise in order to settle past tax debt. The other thing was I was trying to also be responsible with money. So I was, doing an offer and compromise, and then I was like, I moved, I was trying to save money, doing all this stuff, only not like realizing that, it was better for me to hire the professional first and like start working and getting things done versus trying to like fix my life first and do an offer and compromise, because you're like, the IRS, from what I've seen, it's like, if you're in a bad place, like that's when you should let the IRS know that you want to compromise. You don't get to an amazing place where you now save a ton of money and then you try to do an offer and compromise, because then they want that money. So I still owed money in the end of my compromise. It wasn't like it went to zero, but it was significantly less than what I originally owed. And I'm so grateful that I was able to even go through that process and be able to just kind of get whole again. It opened up the door and allowed me to be able to purchase a home because I wasn't burdened by a ton of tax debt. So that was and I think it's just important to let agents know, like, hey, if you haven't been paying your taxes, or if you are have not filed in a while, like, you are not alone. I guarantee you, there's a ton of agents that are in your boat, and that's why that's the heart behind this seminar, is to make sure that you're going into 2025 a lot more powerful with your finances than you came in with. So, yeah.
Yeah, thanks for sharing that. I love that you knew, like, you thought you were doing the right thing, right? You're filing, you were going on payment plans, yet you were still getting in over your head, and you had to find professional help to do your compromise for you. So those are some great tips there to help us get off the launching pad of where to take this conversation, right?
Yeah.
Tom, what would you like to share about your history? What's a good lesson learned?
Can you define offer and compromise, Tammy, just to make sure people understand what that is, IRS?
Oh yeah, please forgive me. It's in real estate terms, it's like a short sale. I feel like that's the best kind of definition, when you owe more than you have in your bank account to pay, and you want to start over. You're submitting so let's say you owe $100,000, but you only have $10,000 in your bank account, or nothing in your bank account. And you want to make sure you settle your debts with the IRS, you file an offer and compromise. And it takes time to do it. I know I did mine during COVID, so it took like a year and a half, but that was COVID. I think it still takes maybe like 6 months. So you're giving the IRS everything, that all your finances, showing them what you have and saying, hey, this is what I'm willing to pay. If it's nothing, it's nothing. If it's something, it's something. They will look through your finances and they will determine whether or not you're able to pay something, or how much you're able to pay. At least that's how it worked for me. And yeah, it's the short sale of taxes
and it was a pretty significant short. Like, the deal they made you was, I didn't make this deal, so I'll get ready to talk about that next. But like, that was a pretty sweet deal. Like, they made you a really good deal, which is great. So go to the IRS.
You were there. I forgot you were there when I got the call. I remember. Yeah. I got a call from the IRS, while we went out shooting, and I was like, oh my gosh, my offer and compromise was accepted.
You talked through the thousands of dollars that you saved. I was like, holy smokes, I had no idea. So, so here's what I did. Similar story. I didn't pay my quarterlies. Like, I was paying some taxes here and there just because that's what I was doing. This was 15 years ago, maybe a little more. And in the end, I was that guy that would like take my receipts and stick them in an envelope that wrote like January on it. And at the end of the year, I'd have like 12 envelopes with a ton of receipts in them. Like, it was kind of dumb. And then my taxes would come and I would just hate it. But in the end, I owed the IRS 3 years worth of taxes, and I was making them deals. They'll make you a deal at like 10%. So I was just paying them off. But after 3 years of that, you realize, well, I got a lot of debt and I'm never getting ahead of this. This is dumb. Start paying your quarterlies. So for me, knowing the way I'm wired, I hired somebody to pay my quarterlies. And in the end, that person pays my bills, does my taxes. She does everything for me now. And actually, a bunch of people in our organization actually work with her. I hired somebody just to do my personal stuff. And at the time, Michael Kilner was running Fulcrum stuff. So I paid somebody to leverage it out. And then I focused on that stuff a little more. I need to focus a little bit more. Does that help?
That is helpful. Yeah. So, and for anyone who's, watching along this, we are going to get into those strategies. Like, if you're not even paying your quarterly taxes, like, let's talk through that. And then we'll go bigger, higher level for those who are like, I got my quarterlies handled. I'm looking for strategies. We'll get there. So both Tom, let me start with you. You're like, what decisions did you make then that has helped you run a better, cleaner, more financially sound business now?
Yeah. So keep your eye on the ball a little bit. Like, I didn't like that at all. Right. Like, I just don't like the process of doing your taxes and finances. Like, I hate balancing a checkbook. I've never done it. Like, that's not my thing. So when you don't do it, you don't focus on it, it comes back and bites you in the butt. But if you hire somebody and then you start meeting with them on the monthly to go through your finances with them, and you look at it like, I'm just focusing on what I'm doing, everything got easier. Like if I just have a 30-minute meeting with my bookkeeper once a month, she says, here's how much money you spent. Here's the budget for going out to dinner, and you blew it this month, so don't go out next month. Like it literally was that, just hiring somebody to help me focus on a monthly basis so that just the little things mattered. That's changed a lot of stuff in my life. Like we go to flip houses, focus more on what you're doing. In the company, running the company, sit down and have a budget meeting with Ty, frankly, on the regular. I've learned to watch my money and watch my business much more closely. Otherwise, it will kind of bite me in the butt.
Yeah. Temi, any for you? Any specific like things that you incorporate now that change your business and your profitability now?
Oh, sure. I think that the biggest thing was hiring a financial coach. So I kept myself like,
oh no, did we lose Temi?
Yeah, we just lost her. She disappeared.
Back on just a moment while she does that. I did see that there was a question that came up, which it's not on the screen now. There we go. Does an offer and compromise affect you negatively for a period of time? I actually do not know the answer to that. And if we don't get the answer now, I bet Michael can help us with that shortly. Okay, here comes Temi, everybody. Hang in there with us. Michael's going to be coming onto stage here in just a minute. So
well, we're waiting for Temi to come back.
Yeah.
I'm going to expand a little bit. One other thing that we've done is our bookkeeper, my bookkeeper works with my CPA, and the CPA for me personally is also the CPA for my business. So that she manages our books at our business and my personal life. And I have a monthly meeting with my wife to go through a budget as well. That all trickles up to my CPA. So I've kind of gotten all my people sort of all around my whole world and managing our flip business, or manage my personal business and our real estate company. The consistency there has been helpful for sure.
Gotcha. I love that. Like having other partners to hold you accountable, your CPAs, talking to your bookkeeper, they're holding you accountable across the board. And a check-in with your life partner is extremely important if you're making financial decisions together. I actually love that you said that.
Well, that's a recent thing. We had our budget meeting together for the first time like 3 months ago. Like my wife and I were not in budget meetings, and it was a mistake. But our bookkeeper said, I need to do your wife's finances too. And she does. And it's actually really helpful.
I love that. Great tip. Marriage advice and real estate advice from Tom Cavanaugh.
That's legit. It's helped a little bit, all sorts of ways. Yeah.
Fantastic. Temi, you're back. We appreciate you. You fell off at a moment. There was one question. Can I point it directly to you?
sure.
Do you know, once you make an offer and compromise, does that negatively affect you or your credit for a specific period of time?
So I think for me, for what I remember in the rules, so it didn't stop me from like buying a house. It didn't stop me from moving forward. What I think I can't, like, you have to pay your taxes on time. You have to you can't owe, like, you have to pay your tax, like, you have to be on top of things once your offer and compromise is accepted. I think it was like for the next 2 years, I have to be like on the straight and narrow with my taxes. So I think
Gotcha.
I was already on the straight and narrow, like, before my offer and compromise. Like I started saving, I downsized, like I moved to a cheaper place. I should have done my offer and compromise before I started doing all that, because the IRS is like, hey, like, you're saving money now. That money can go to us. But it was really important. So I did not end up in the same financial position. And I hired a financial coach. I hired a financial gym to hold me accountable to my finances, to also to give me like a broad look. And changing how you do things financially is a habit, like, just like any habit that we have to develop. And you kind of have to figure out, well, what is the best way that you can develop better habits, whether it's a financial habit or a health habit or whatnot. So I do well with accountability. I do well with a coach. So I hired them, and they were a pivotal force of like kind of getting me back, getting me on track. And then I hired a bookkeeper, got on top of that. And then I upgraded, I think, my bookkeeper. I now use who Tom uses. And they meet with me once a month. Whereas like my old bookkeeper, I would just make sure that they got the documents. So
Yeah.
changing your habits, not just doing it often compromise, but changing your habits matters quite a bit. Yeah.
Absolutely. That is great. Well, Timmy and Tom, thank you so much for sharing your experiences. We wanted to tap into some of the ugly sides of real estate so that we can pivot and talk into, get from the experts. So let's bring Michael up on stage. And Tom, if you can actually help me introduce Michael, you've worked with him a lot longer than I have. Hi, Michael.
Hi.
Hi, Michael.
Hey. So everyone, Michael is the founder and president of Agent CFO. He's been in the business of helping agents and teams run their bookkeeping, run their tax strategies for about 10 years. He's a graduate of Catholic University. Is that right, Michael?
Yeah, you guys are going deep
Awesome.
into the bio.
We are. We dug into your bio. Tom, what's one or two more things you could tell us about Michael?
I think a couple of key items are that one, Michael's an entrepreneur, just like all of us. He's built this business from the ground up by himself. Started just managing on the side of one of our friends' books and turned it into you got like 80 clients now that you close out books every month for. You built a pretty robust business from the ground by yourself. And I think that's pretty telling. I had another one. I can't remember what it is right now. I'll rattle it off in a minute. There's another good one. So, it's the intimate relationship. So, the relationship that we've had with you managed Fulcrum's books at a pretty robust level. The ability to call and you understand our finances, you understand the way our business runs, and you run 80 books of real estate agents. You understand the insights of our business at a level that a normal CFO or a normal CPA wouldn't know, because you can see so many insights in so many different books and give us advice along those lines. It's incredibly valuable and something I didn't catch we were going to get when we started working with you.
Great. Yeah. Thanks, Tom. That's
great.
Hey, real quick, nice
because I cannot see the comments. Cherise, are there any other comments that we need to address before we let Michael get into the depth of his conversation?
We have so many questions, but I think all of them are going to be for Michael, though. They're all
okay. Good.
They're all pretty tax specific.
Yeah. And please forgive me. I was not trying to give tax advice. I was just trying to tell my so if you hear me give any tax advice, don't talk to Michael, get advice from him. I'm not that person. Sorry.
Yeah. So hang on there with us. Remember, there is a raffle at the end of this for the 3 months of Financial Gym. And we're also going to hear briefly from Katie Griffith with the university title. So Michael, why don't you tell us, you've got a great presentation set up for us today. I'm just going to turn things over to you and I'll be monitoring here alongside us.
Great. Awesome. All right. So I think Cherise is able to pull up my slides. Awesome. Thank you. So first off, thanks to Fulcrum and Universal for hosting this. I do, I'm an accountant. That's what I do. And so I, most of the time I prefer to just sort of sit behind my desk and crank away at accounting problems. It's where I'm most comfortable, but it's nice to occasionally be able to get out and in front of people and talk about this stuff. The subject matter, right, or sort of the title that we gave the webinar was Taxes: the Good, the Bad, and the Ugly. I think that I want to talk about the good. I want to talk about sort of the positive things that we can do, and not necessarily focus on just the bad and the ugly, because we don't want to leave everybody thinking that this is some sort of hopeless situation. There are a lot of good professionals out there. Timmy and Tom were both talking about professionals that they work with who are really able to help them understand their finances, to interact with the IRS. There's a lot of professionals out there. And I think one of the things that I definitely want to hit on in this session is, how should you relate to really good professionals? And I think if you think about yourself, right, your career as a real estate professional, right, think about the most productive, the most fruitful relationships that you have with clients, and what those clients are like. What is the avatar of those clients? And then put yourself into that mindset when you think about how do you relate to good financial professionals in your life. Like, are you a good client? Are you somebody that that is collaborative and is someone that they, can work with and can help. So that's just one of the things that I definitely want to make sure I hit on. So who am I? I mean, you guys got a little bit of the background, but one thing that wasn't really said was that I actually came into working in finances and in tax through real estate. I actually didn't come from some other, from the accounting industry and said, "Oh, real estate, that's what I want to focus on." I actually started as the director of ops um, for my brother's real estate team about, and now I guess it's 12 years ago, a dozen years ago. I went from that to I did all of like the controller um, the controller role for an independent brokerage. Then I became an enrolled agent with the IRS. So I have the same practice responsibilities and privileges as a CPA when it comes to the IRS. CPAs have other sort of professional capabilities that I don't have, but when it comes to taxes in the IRS, we have a very similar kind of sort of role to fill. And then I founded Agent CFO, and that business is built around real estate agents and teams. I mean, what we do is basically build and maintain excellent accounting, systems and software for real estate teams. We do bookkeeping, we do payroll, we do all of the tax consulting, all that kind of stuff. I have a podcast which I'm actually restarting this year. The Agent Money Pod. If you want to look it up, there's some really good sessions on there, some really good information. We have a lineup of some really high level elite agents that we're going to be interviewing this year. So I'm excited about that. And at this point, I've worked with hundreds of agents and teams, whether it's been short-term consulting or long-term consulting, or they've been a client for the past 10 years. I've worked with a lot of teams. And so I have a lot of stories and insight into how they operate. All right. So the title was The Good, the Bad, and the Ugly. I really want to talk about the good news about taxes and business. I sound a little bit like, I'm spreading the gospel here, but, I really do think that there's a positive way to look at it. And that's what I want to focus on. So the number one thing, taxes are emotional. And I think that does come through, when Tom and Temi were talking about their individual experiences. There's an undercurrent of this is something difficult, right? There is something here that is very human, right? And because it deals with money, and everyone has very different relationship with money, because it deals with a third party that can basically force you to force you to give them that money, and because it's complicated and very opaque, those things make it very emotional, and that's okay. Like, let's all just acknowledge that, right? That taxes are emotional. That we all have a different relationship with it. And there's a lot of things that we can do about that. So what are our typical emotional responses to taxes? First is fear, right? So the thought of, the IRS is coming to get me, right? Or DC tax or Maryland tax or Virginia tax, they're coming to get me. And so there's this fear response we have. There's also the uncertainty. Like, where do I even start with any of this stuff? I'm making money, but what do I owe? How do I even estimate what I owe? What is deductible? There's a lot of questions that we're getting in the chat about those types of things. Then there's overwhelm, right? There's just too much to know, there's too much to do with taxes, and I'm already feeling underwater. Avoidance. This is just another emotion that we can come to taxes with. For real estate agents, it's like, well, I'll just go sell another house. I'll just go make some more money. I will just avoid the issue entirely for a period of time, because I will just go and do what I know how to do best. I'll sell another house. And And then on top of that, right, you add this other element of anxiety, right? Where, okay, maybe I have the fear and the uncertainty, and I'm overwhelmed, and I have the avoidance, but I'll just manage the stress rather than dealing with the situation, right? And for most of us, we know this, whether we've thought about it or not, but we know that um, taking action to solve the thing that's creating the anxiety, that is usually what we need to do, right? Even if it's not perfect, even if it doesn't get us all the way there, right? The action is what gets us past the anxiety. It's the waiting, it's the sitting, right, with it and not doing anything. That's where the anxiety really increases. So these are very normal things, but they don't have to be our normal. They're not necessary. We don't have to have this type of relationship with taxes, even if many people do. So I think I might have skipped a slide, but that's okay. I'll think on my feet here. There's basically, when I think about how do you tackle those things, right? How do you tackle all of those emotional responses we have to taxes, right? What are we looking for, right? What we're looking for is we're looking to get to a place where we have some peace, some calm, and some confidence when it comes to our taxes. And I think those three things can be found through systems, habits, and relationships. So those are the three things that I want to talk about as a broad overview before we get into very specific strategies. And you heard what Temi and Tom were saying. They touched on all three of these things, right? They've built systems to manage their finances so that taxes are not such a big lift. They've built in habits, right, where they have a regular cadence of how they look at their finances, how they think about their finances, and make changes. And then they have relationships. They have other people who are involved in this with them, right? And through those three things, you can see where they were and where they've come, and they want to stay in this new place, right? So let's talk through some of those systems and habits and relationships that you need to really bring calm, confidence, and peace to your relationship with taxes. Okay, so we're going to talk about systems first. And the principle that we have to all hone in on, it's very simple, right? We're not going to be complex. Better data leads to better tax outcomes. You just have to believe that, like, in your soul, in your bones. We've all heard the expression, garbage in, garbage out, right? But it works the other way too, right? Clean data in, good stuff out. If you're able to build a system that allows really good and clean data about your financial situation to flow through to your tax professional, right? You are automatically going to be in a better place, right? And so everything we want to focus on with systems is about making sure that the data is clean, that there's not a lot of mixing, right? And that you can get to the answers faster because you're not trying to sift through all of the things that are not related. And so very common, very common sort of instance of where it gets very messy is, let's say you are a real estate agent and a real estate investor. What is common is that a real estate agent who's also a real estate investor will mix all of the expenses related to those two different business lines together into one bank account, and maybe also will mix in their personal finances in that bank account, right? So then it becomes a very difficult to untangle web where you can hire a professional to help you and they'll probably be able to untangle it, but not without a lot of effort, right? And frankly, cost. And there's some really simple ways that we can avoid that. So first action step, if you haven't done this, you really haven't started in business yet, I would say, is create separate personal bank accounts and business accounts. I should say business bank accounts. This seems simple, but you'd be surprised at how successful Some people can be in business without really doing this and doing it well. So whether you have an LLC or not, we can talk about everything that goes into operating as a sole proprietor versus operating as an LLC. Even if you don't have an LLC, you still want to separate all of your business revenue and your business expenses from your personal expenses, right? And so very, very simple way to do that would be just to, if you're a sole proprietor, go to your bank or go online on your phone and just open a second checking account. And if you are accustomed to using credit cards, hopefully you're using them well and you're paying them off each month. But if you're accustomed to using credit cards, go open up a separate credit card that you will attach to your business account. And all of the money, all the commissions that you earn will flow into the business account. And all of the expenses related to your business and any business expenses that are on the credit card will come out of that bank account, and your credit card will be paid out of the business bank account. You just want total and complete separation. Once that's done, you are in a great place, right? Because now if you bring someone else into it, or if even you yourself are trying to track and categorize things, it'll be much simpler. You won't have to sort through all of your personal expenses to find your business expenses and what is deductible, and figure out how much did I make, how much did I spend, what's my net income, and then ultimately what do I owe in taxes. All right, so then the next action step, I alluded to this, the next action step is to decide on a business structure, right? So you can operate as a sole proprietor, or for many of us, we can operate as an LLC. I'll also get into the discussion about an LLC that then elects to be treated as an S Corp. There's a lot of talk about S Corps and the advantages and disadvantages of them. So I'll break that down for everyone. But I think the important thing to know is that from a tax perspective, operating as a sole proprietor or as a single member LLC, there is no difference in your tax treatment, right? So an LLC is not some magical portal to new deductions, right? It is a legal entity that you set up with a state or with a local jurisdiction like Washington, D.C. You file articles of organization with the state, and you basically are saying this LLC is now something distinct and separate from the owners, right? And usually it's just one owner. Usually it's just you that in that single member LLC. And that LLC can have its own employer identification number from the IRS. That LLC can have its own bank account, and that LLC can own assets, right? It can even own a stake in another business. It could own a stake in a partnership. It could own a piece of a corporation potentially, right? So these LLCs are very flexible. What they provide is a certain limitation of liability. And they provide a level of anonymity potentially, because you're able to, when somebody is giving you a 1099, they're requesting a W-9 from you, you can give them the EIN of your LLC rather than your social security number, right? So that's just one thing you just need to really kind of wrap your head around, is that the LLC is not the thing, right? The LLC has a lot of advantages, but there's no real tax advantages until you get to sort of higher elections, more complex elections and things like that. All right, then this is sort of my final action step, because we're trying to keep this very basic, right? We're working our way up the ladder here. We want to build a strong base, and then we can go and build some more things that are more complex on top of it. The two things that no one has an excuse for anymore, because it's 2025, right? And smartphones have existed for a very long time now, is that we should be managing our receipts and tracking our mileage, right? Between those two things, you've built the foundation for if I need to justify my expenses to the IRS, if I need to show why I was able to take this mileage deduction, these are the two things that are going to give you that basis, right? It's not enough to just say, well, I will go into the mileage, right? It's I usually, drive 12,000 miles a year, and 80% of that um is business mileage. So I'll just take 80% of 12,000 miles and multiply that by the standard mileage rate, and that's my mileage deduction. That can work so long as you're not audited. As soon as you are audited, right, you have no basis, right? So you're actually putting something in there that is probably untrue, right? And you definitely have to avoid that. Um, but you want to be able to have a really good basis, and it's a really simple, cheap app to get. Just get Mile IQ, track all of your business miles. And then on the other side, right, how do we manage our receipts? There are a bunch of different apps that will take pictures of receipts for you, that will read the receipts for you, that will categorize them for you, all those types of things. And I would say if you don't want to go into the app store and look up ratings on expense, receipt management apps, the least you should do is every time you have a receipt, snap a picture of it with your normal camera app, and then at the end of every month, end of every quarter, end of every year, find all of those pictures that are receipts and push them over into Dropbox or push them over into Google Drive, right? Do it digitally. There's really no reason that you need to have a shoebox of receipts someplace or an envelope of receipts, right? Like, we live in 2025. We can do this digitally. And those are the things that you need to substantiate your deductions, right? You can't just present a credit card statement to the IRS and say, well, see, I went to Chipotle on this day, and that was a business meal. They'll say, well, we need to see the receipt for Chipotle, and on the receipt, you should probably have who you met with on that day and what you talked about, and was it actually a business related expense or not? Business related meal, or was this just you going to Chipotle by yourself? You really need to have that sort of contemporaneous evidence in the receipt to substantiate it. So everything we've talked about is exceptionally basic, right? Let's just go back through it. What are the things we've talked about? We've talked about separating your personal and your business expenses in those different accounts. We talked about potentially forming an LLC if you want to have that extra barrier of anonymity and protection. And then we talked about receipt management and mileage. Those things can get you very, very far. So now let's layer on to that system some habits. Shelly's here.
Hey, Michael. How's it going? You're doing great, man.
I feel so alone. There's
like,
just
put me
zero
back
feedback.
in there.
Yeah. So hopefully it's going all right, and I haven't. And
You're
the whole
doing
audience
great.
hasn't fallen
Yeah.
asleep.
I thought we would actually pause just real quick to see if there are any comments in the chat. So, Charisse, if there's anything you want to bring forward, I know we are chatting privately in my office, and you got a wow with your quote of an LLC is not some magical portal to new deductions. Like, a lot of us, there's, if anyone watches the Schitt's Creek, there's that hilarious thing where it's like, it's a write-off. And we're like, well, you writing it off to who? It's like, well, it doesn't matter because it's a write-off. I love that little comment there. So if you guys can throw in the chat, like, what have you learned so far? Like, what are some powerful takeaways? Do you have a separate business account? Are you tracking your mileage with good notes so you can actually prove in the case of audit, where you've been? A question on the screen: when you add info to your receipts, do you have to prove anything?
Yeah. So this kind of I'll take a very broad view of this question because it sort of gets to the heart of it. Is that I think what everyone has to recognize is that the burden of proof for the deduction is not on the IRS, it's on the taxpayer. So deductions are, and whether you think that's fair or not, I'm not here to referee that, right? But deductions are a matter of legislative grace. That is actually how it is defined. So we have to do everything to prove the deduction. The IRS has to do very little to disallow it. But what I would say is the IRS will look at patterns, right? They will look to see, is this normal? And actually, even further, when they're looking at particular expenses, do they say this is ordinary and necessary for the business to be operated, right? So if they see a pattern of highly suspicious activities that do not look to be correlated to the business, and you don't have contemporaneous receipts, you don't have a calendar full of appointments that show, hey, I met with this person on this day, and here's the receipt, and I wrote what we talked about on there, right? That's probably going to be good enough. If you only have one or two of those receipts and 100 other transactions that you just can't substantiate, or it seems like you're starting to abuse the system, right? Then they can disallow all those deductions. So I would just say, there's no surefire way to be like, yes, I can prove every second of every day where I was, but so long as you show a willingness to be complying with that, right? To be creating contemporaneous evidence and having a meeting log and having a mileage log and keeping receipts, then you'll be in good shape.
That's great. That's a great response. I love that idea of like making sure something matches on your calendar to prove you had a business lunch with so and so.
We all live
right?
by our calendars, right? So
Right.
it's another great way to just go and be able to check and see. Yeah, I was definitely meeting with people, and it even says here where we were meeting up for lunch.
Absolutely. That's great. And if you're going to get to this later, Michael, we can defer this question. But we get this a lot is, can I deduct my home office or a portion of my home from which I work regularly?
Yes, you can.
Okay.
There's actually several ways to figure the home office deduction. So this kind of is getting a little bit into the weeds, but we can talk about it because I know it's on people's minds. Okay, so the home office deduction is, and we're talking specifically about somebody who operates a single member LLC or a sole proprietorship. We're not talking about an S corp. Those have different rules around the home office deduction. So we could talk about that potentially later in the question section. But if we're talking about a sole proprietor or single member LLC, somebody who is filing, a Schedule C on their tax return, you'll hear that, for self-employment income, you could take a home office deduction. So let's say that you have a home office where you do work exclusively, right? Like it's not the kitchen table where you just like occasionally have your laptop, right? It is, it's a place where you go and you sit down for work most days, and that's what it's used for most of the time, or not exclusively. And what you can do is you can look at the square footage of that space. Let's say it's 100 square feet and your house is 1,000 square feet, right? This only works if you own your house. Can't do this if you're renting, obviously. If you own your house. So if it's 100 square feet and your house is 1,000 square feet, it's a simple example. It's 10% of the total square footage. So you could take 10% of your total costs associated with your home and assign them to the home office, right? So that's utilities, right? That's your cable and internet. That is any repairs and maintenance that have happened to the property. It's your mortgage interest. Although if you're taking the mortgage interest deduction, you itemize, you can't double dip. So you can basically take, the long and short of it is you basically take a portion of your entire home expenses and assign them to your home office space, and then take that as a deduction.
That's great. A good quick answer there. And that's a number one question a bunch of people have. So well, let's keep rolling through your slides. You want to throw them back up for presentation?
Sure.
And we'll keep going here. I'm happy to stay on or jump off into the background, but you're doing great.
If you want to stay on and maybe give me some feedback on things, I have no idea what's what's happening. All right, so some habits to drive the systems, right? So we talked about our system. Let's talk about habits. Okay, so some people will look at this graphic on here and they might immediately think of Profit First. Okay, so many people have heard about Profit First. It's the book written a few years ago by Mike Michalowicz. I will plant my flag. I will put it in the ground and say Profit First is overkill. I love the concept, but actually in practice, it basically is unworkable for most people. There are some people who will stick to Profit First and will swear by it, right? And they will spread the good news, and they're all about the Profit First, right? But if you read the book and you're excited about it, and then you want to go execute on it, you will probably, if you're like a normal, like in the normal band of people dealing with their finances, you'll probably find it overwhelming. Like you won't be able to actually execute on the plan. Okay, but I think it's still a very sort of simplified, modified version of that is what most people should be doing, right? And this is just the flow of money, right? So you've done the bank account separation. You have a business bank account, whether it's attached to an LLC or it's just a separate personal account that you're exclusively using for business. We've got that already set up. So your commission check comes in, right? It's going to go into a bank account called revenue, right? And so now we're actually, we're expanding on the number of accounts that I want you to set up for your business, right? So you've gone to the initial step of setting up that one. Now we're expanding it a little bit. So we're actually going to have 4. And at this point, right, you probably are at a bank where they're not charging you for every single account that's open. You should be able to get away with like not paying a ton of fees. If it costs you a ton of money and fees to open up more accounts, move to a different bank, where you can get some free accounts. But your commission check is going to come into an account that we're just going to call revenue, right? Revenue is just a different name for kind of top line income, right? All the money that comes into the business that, before it gets spent, put it in there. And then you'll want to move money, right? Based on that commission check that's coming, you want to move money in certain percentages to 3 other accounts. And those 3 other accounts are going to be your operating expense account, your owner's pay account, and your tax savings account, right? The most important of these, believe it or not, we're talking about taxes, is your tax savings account, right? If you literally only just had a savings account for tax, that would be awesome, right? You could almost stop there if you wanted to. But going a little bit further, you are running a business after all. You want to know, okay, I'm putting a little bit of money aside for my operating expenses, right? To run my business, to pay for my marketing, to pay for my gas, to pay for my dues, those types of things, right? I'm going to take a big chunk of it and I'm going to live on this. This is my owner's pay, right? This is what I need to actually live, where my family needs to live. And what I'm going to treat most sacrosanct is what is owed to the IRS and to the state authorities. It's the tax savings, right? And that you just really, really need to get into the habit of doing that, because realize that no one else is coming to collect the tax for you. You're probably not a W-2 employee, right? You are an independent contractor. You are a business owner. So you have to have the discipline of saving the taxes yourself. And so I put on here 25, 50, 25 for the percentages. I would say that it's effectively somewhere between 25 and 30% is what you should be saving. And that should be more than enough. So yeah, this is to go back to it, right? The first thing I said is I don't actually discourage anyone from reading Profit First. I think the mindset of Profit First is excellent, but then I think the execution is really, really hard. Okay, next action step. So we're layering on things now. You want to categorize and track regularly, right? This applies to your personal as well. I mean, we're just focusing on the business side right now, but you really need to get into the habit, if you want this to be a very robust system, of categorizing and tracking your expenses regularly. So there's a distinction that we need to make. And the distinction really now becomes, are you a DIYer or are you going to hire a professional? Because I think that there's a trap here. The trap is that folks will sign up for a very sort of high-powered accounting software that is simple to purchase and seems very simple to use on its face, but then actually creates a lot of problems down the road if they are not a professional accountant or bookkeeper, right? This might be hard for people to hear, right? Oh, well, he does bookkeeping, so obviously he wants everyone to like use a real professional bookkeeper. It doesn't have to be me. I don't care. Use whoever you want. Just don't do it yourself. You will get yourself into trouble. These systems are, you can do about 80% of it yourself and probably pretty well. And you will completely fall flat on your face for the last 20%. And you will be missing huge chunks of data, right? And there's little nuanced things that you take a kind of a long time to understand and to explain. But I just wouldn't go to the QuickBooks Online, start paying for that stuff, unless you have a true professional who's helping you out, or somebody in your organization who is trained on those things and who can manage it, right? And not somebody who's just said, oh yeah, I've used QuickBooks before. Like, oh really? Like what part?
Yeah, and
You really have
Michael,
to dig in.
I can add to that. Like, as someone, I've been doing this for what, 6, almost 7 years, and piggybacking on Tom and Temmie's experiences. It's like we oftentimes think like I can do this myself. I can self-manage. I don't have that many expenses. But then the minute you get behind, it's hard to track. It's hard to get caught up. And I know it goes
Yeah.
to the bottom of my priority list. So I never really felt truly comfortable till I hired a bookkeeper.
Yeah. Yeah. And I think there's a perfectly good argument to make that if you're somebody who is very numbers oriented, right? You will keep on top of it. And maybe you just don't have the revenue to support hiring an actual professional. Keep it simple, right? If you've done the other building block steps and you're not trying to peel apart all of your personal and your business expenses, you can just look at one bank account, on the personal side and a few bank accounts on the business side and a business credit card. I would just manage that in Excel or Google Sheets, right? Pull in all of your transactions and then sort and total and do those types of things. There's some really good templates online that you can get to sort of help you through that. They'll have all of the deduction categories on a Schedule C. So it's just this is me doing this for a long time, having a lot of experience. Like, save yourself the money if you're going to do it yourself and do it in Excel or Google Sheets. And then if you really want the leverage and you're ready for that professional relationship, then find somebody who can operate QuickBooks for you, or another accounting software. There's a few other ones that, that are good. And have them totally leveraged in doing that, and don't try and learn that software or learn accounting.
It's a good tip. That's an absolute good tip. All right, we got a question. Working with all these professionals sounds expensive. What would you recommend for agents just getting started? I mean, I think you just said it, right? You could pretty much pull everything into an Excel and document it that way, right?
Yeah, no, and it is. It's not, good professionals are not cheap. It's like good real estate agents are not cheap, right? If you find a cheap real estate agent, watch out, right? So I think you really have to look at it as, does this point of leverage give me sort of the emotional freedom and the time freedom to go and actually sell more, right? It's you're hiring for your team, right? So just like you might hire an administrative professional, just like you might hire, frankly, to work on a team. Like, you got to think about it that way. So if you're a solo agent or a newer agent and you're thinking, do I go solo? Do I work with a team? Well, you're really hiring a team. When you for all of their capacity, all of their culture, all of their training, all of their administrative muscles, right? That you are basically hiring to do that part of your business. And you have this instant leverage there. So I think you have to look at it as, yeah, it is expensive. If the cost is too high, figure out how to do it yourself. stay away from expensive apps, right? Just do it in Google Sheets, like we said. And then when you are ready for a professional, be very discerning, right? Don't let your dollars go to waste. It should be when you spend those dollars, you're getting true leverage. Like you are getting a true return on that investment because they're really taking things off of your plate, right? And allowing you to focus on what it is that you do best. I'll say one more thing about this because one of my sort of favorite things to talk about is you have to remember that you are delegating, not abdicating, right? You are not abdicating your responsibility to understand your finances and stay on top of them. You're a business owner. You never get to delegate that responsibility, or sorry, abdicate that responsibility. You can delegate pieces of it to professionals, but relationships go really sour when the business owner basically says, well, I gave it to them, they should just handle it for me. No, I'm sorry, that's not how it works. Right? Like, you need to be engaged. This is your money. You need to be asking good questions. You need to be thoughtful, right? You need to be curious. And even if it's sort of emotionally draining for you to have to look at your financials and to review it, it is always helpful because your bookkeeper can't read your mind. Your tax accountant cannot read your mind. They will need your collaboration for course corrections. They will need to know, what is it that you need more of? What is it that you need less of, right? What questions are you trying to answer? It's very collaborative. So you are delegating, you are never abdicating. I think there was another question that popped up on screen. I was explaining, so I didn't see it.
Yeah, no problem. Sharice, can you throw that back up there? So as realtors, can we be considered real estate professionals and therefore reap the tax benefits?
Yeah, so this is going to, this is for real estate investors. I'm assuming that this is the question that we're trying to answer here. So I'll just go with that.
Yeah, go with that.
So, yeah, so there are so many layers to the reps real estate professional status, and I actually don't want to go too far into it because I think there's so many layers, and I don't want to just give people sort of a little piece of it that they run with and then not really understand. Basically, the heart of the question though is that there are several tax advantages to being both a real estate investor and a real estate agent if you can prove real estate professional status, right? And that's actually the key point that I want to make, is that just being a real estate agent does not automatically qualify you for the real estate professional status. There is actually a pretty high barrier for you to prove and show the time that you spend in real estate related activities and managing your real estate portfolio. So I would say that's almost a topic for another day, like another whole session with somebody who does more real estate investor stuff.
Mm-hmm.
So
I would just say
similar question. I'm not sure if this is appropriate then. This was another question.
What are my tax write-offs as a realtor?
Is that like, do we not want to answer that one?
that's actually good, because I think there's sort of a question here, like, what are my tax write-offs as a realtor? Basically the same as everybody else. Like, now, if you're getting into real estate professional status, what that has to do with is how your real estate investing income is treated and what it can be offset by. Right? So that's what I'll say with that. When we're talking about basically everything else, running a business as a professional, you basically have the same deductions as everyone else. And there are certain things that are deductible and there are certain things that are not deductible. We can talk about that. But we're not in, like, NAR is very big and they have a lot of power, but we're not so set apart. And so we can talk about that.
Right. Yeah, that's great. And just curious, Michael, like if people do have more questions or want to go further in depth with you, can they reach out by email? I mean, obviously there's a level of just answering, oh, my light went off, just answering a question versus getting a whole consultation. But is that services you would provide?
Yeah. So I think this is a good question, Shelley. Well, I think what my team really focuses on is that we do bookkeeping, accounting, and fractional CFO work for for real estate agents and teams. And we're usually we're not the best resource for you if you're like, hey, I just have a quick tax question, or I need someone to file my taxes.
Right.
I have a lot of really good professionals in my network who are people who just focus on filing taxes, who, maybe could help with one or two strategies if you're an investor. So you can always reach out to me. I might immediately turn you right around and CC another really good professional.
Great.
But if you're looking for sort of ongoing support as you grow your business in real estate, and you need a really good bookkeeping, accounting, fractional CFO partner to do it with you throughout the year, not just come tax time. Yeah, I mean, that's what we do.
Great. That's perfect. I appreciate that. And we'll make sure your information is available. It's already in the chat. And of course, we'll make sure it's at the end. All right, back to your presentation.
Yeah, so we talked about this. I kind of wanted that to be a very clear divide of, some of this software looks like it's DIY. It's really a professional tool. So if you're going to go DIY, keep it simple, keep it straightforward in a system that you really understand. Okay. So now we get into relationships, and I've already alluded to this several times because I think this is very much crux. But what are you looking for in a relationship, right? You are looking for leverage. You're not looking for abdication. You're looking for professionals to guide and accompany you on the journey of being a business owner. And that might be several people along the way. It just depends on who you need in your life at the time and what their core competency is, right? So I think that's really, sort of key to understand. So bringing it back to our, as real estate agents, what is your relationship with your clients, right? You are there very much to guide and accompany, right? You are not there to sort of dictate how everything happens, and you're not trying to drag people across the finish line, right? You're trying to understand their needs and their concerns, what they're looking for, right? What they're not looking for, and help them hone in on the right real estate decision for them. And so you have to think about that same exact way with the professionals that you bring into your life. So let's get to a principle. This is a principle that I think everyone in our day and age needs to internalize, is that TikTok is not real life. The stuff that you see on TikTok and Instagram and Facebook may have elements of truth to it when it comes to tax deductions, tax write-offs, whatever you want to call it, credits, like those types of things. But it probably doesn't apply to your situation. And I think it can be very dangerous to get to a place where you're sort of, you're ingesting a lot of information on like TikTok and Instagram where there's very little context. I mean, literally by its nature, these are very short, sort of like supposed to go viral clips about things that are very juicy, right? Like, oh, there's this massive tax deduction, right? You set up an LLC and then you can write off your G-Wagon. Whoa, right? So like, take a step back. We are professionals, right? We cannot take our advice from people who are trying to sell us something, right? Or just sell us their attention on TikTok or Instagram. Doesn't mean that they're always wrong, but don't rely on that. And definitely go, like, even if something sounds interesting, have a real conversation with your accountant, somebody you actually trust, before you do anything, before you take any action. Okay, so, right, TikTok is not real life, so we want to find our real life advisors. And I think, this is a pretty complete list of people that we'll need in our lives. You don't need to have everybody at every time, and you'll need more from some people at different times, and maybe you don't need anybody, in a particular category. But like insurance, right? Do you have a good insurance agent? Somebody who's able to kind of walk you through all of that, all of your liability. Do you have a good financial planner? Even if it's not somebody who's managing your money, right? Like managing your money for an assets under management fee, is it somebody that can help you in, like, really, I mean, in some ways, what Temi was talking about, like as a financial coach, to really sort of whip your finances into shape, help you come up with a plan, have some accountability there. You need to have a good attorney on call, right? I mean, probably, our friends at the title company will probably be a great resource for referrals. Just be like, yeah, because game knows game, right? So like a lawyer, an attorney who does title work, they probably don't want to hear about your the latest lawsuit, but they'll know who the right person to go to is for that kind of stuff. So lean on that relationship
Absolutely.
to find some really good resources. Then you'll
Yeah,
need a
and as
CPA.
agents, our
Yeah.
brokerage, right? Sorry to interrupt, but like and within our brokerage, we also have access to legal initial first level discussions, right? So I
Yeah.
agree. An attorney, you need to have them before you know you need them.
Yeah, exactly. And then a CPA or an EA, so somebody who's doing your tax preparation, and if this is part of the engagement, some tax planning. And so I think this is sort of an interesting thing where people will come to me and they'll say, I just never got any proactive advice from my CPA. And you're like, okay, well, did your accountant know that you were looking for proactive advice? Like, were you paying them in the engagement for like tax planning? They're like, no, I was just paying them. You're like, well, so why do you think that they were going to just suddenly pop out of the ground with all these advanced strategies that required them to do a lot of research? Like, that's not, that's just not how most of those engagement expectations are set, right? You have to think about just the dynamics of it. An accountant, usually what they're trying to do is they're trying to just get your return across the finish line, trying to make sure that they have every piece of documentation that they need to substantiate what they're putting into the tax return, making sure that you're not, getting in trouble with the IRS, and that you're not, just sort of making stuff up. Like a good accountant, that's what they're doing. And that's probably what you're paying them to do. There are other accountants who actually have a structure where they say, okay, we're going to put together a real tax strategy, a real tax plan, or we're going to meet regularly to implement a tax strategy or a tax plan, right? And you got to know who it is that you're engaged with. So don't get angry at them if they don't even know that that's what you wanted, or you can't just expect that. That's not part of the bundle usually. Now, if they have said, here's, here's your tax strategy, and then they don't do anything with it, and they never meet with you, and you don't know what you're doing, okay, fine. You're paying them for nothing. You should be angry and you should leave, right? But if that was never the expectation, let's slow down. An EA is an enrolled agent. That's what I am. And like I said, it's somebody who basically has the same practice, responsibilities, and rights with the IRS as a CPA. So they can essentially, they can basically defend you in an audit situation. Even if they didn't sign your return, they have the right to be able to represent taxpayers in an audit situation, and prepare returns and all that kind of stuff.
That's great. So kind of while we're in this space right here, are there any other questions in the chat that we should be addressing right now, Charisse? And if not, we're going to keep rolling through this because this is great information. I know I'm writing down all sorts of good, facts and pointers. And so just keep those questions and comments coming in the chat.
We have a couple questions that are IRS related. And then we've got a question about LLCs. Do you want to tackle those now, or do you want to save those for more? Like, let me know what your slides are going to say. Are they going to cover some IRS
Yeah,
stuff?
I mean, we've only got a couple more. We don't actually have anything related to the IRS specifically. So if you want to throw those out, we can talk about them.
Okay.
All right, she'll pop them up there. There you go. I have the IRS on a payment plan. Can I still do offer and compromise?
I do not know. I don't know the answer.
Yeah, I don't think we can
Sorry.
venture into advice on that level. You probably need to speak directly.
It's not
to
even
an
advice
advisor.
to that level. I don't even know. I don't know, like either way. So I would, I'll do some research and I can come back to whoever that is if you want to email me. But also, here's the thing. right? What is the offer in compromise? Let's just like think through it logically. Basically, the IRS saying like, well, how much can we how much can we extract from this taxpayer, which is less than what they actually owe us, right? But what can we extract from this taxpayer in a reasonable amount of time that we think we have a reasonable possibility of collecting? So if you're on a payment plan already, they're probably not going to be quick to want to give you an offer in compromise. I'm saying you couldn't try it. I'm just trying to think of like you're putting it from the IRS's perspective, right? Like they're getting what they want.
Mm-hmm.
So the only way that you could potentially offer the offer in compromise is basically say to prove like I can give you a lot more money right now, but only that much, right? So you would get it faster because there's a time value to money potentially. But yeah, that's what I'll say about it.
Do you know anything about the IRS Fresh Start program?
I do not. It's probably related a lot to offers in compromise. There's probably a lot of overlap there. So here's what I'll say. There are tax firms who specialize in these types of tax scenarios, right? Where there are back taxes owed. I would be highly discerning about which one of these companies you go to for advice. I would really want a personal recommendation for a company that does this, just because the scale of these companies that are like advertising on radio or things like that, I would be concerned about just the level of competency of the individual you might get. I'm not saying anything about companies. I would just be very, very discerning about, going to one of those companies because they charge typically a ton of money up front.
Right.
And so you got to really know that they're going to be able to get something done for you. So we talked about this.
Okay. Michael, one thing that I found interesting, because the IRS is scary to me. The IRS is scary. I think I'm going to lose my patience by sitting on prompt forever. I have had such luck going down to our local IRS, like the federal office here in Washington, D.C. And yeah, you stand in line and you wait for about 20 minutes, but like speaking to a professional at a desk face to face, they give you such clarity, at least where to start, what to do, where to go. And same thing, at least for DC, the OTR office, go pull a ticket, stand in line, ask your questions face to face before I would hire someone to walk me through some threatening services, right? So I found that personally has been very like positive experience for me.
Yeah, I mean, you can always ask whatever questions you need. I think what is so disheartening for a lot of people about the IRS is just how dysfunctional it is, right? And that it's this service that, in many ways we know that we need because we need to be able to do things as a country and pay for things, but then it's so poorly managed. And the customer service is terrible, and you'll get these letters 3 or 4 years down the road and you're like, what is this? So I think that, IRS letters, always the first thing is you have to understand what it is that they're even referencing, and they can reference so many different things. So if you don't have like an IRS office you can walk to or go to, like Shelly's saying, you should definitely find a good tax professional who can just be like, here, what does this even mean? What does it want me to do? What is this referencing? And just help have them sort of break down the opaqueness of those letters.
Absolutely. Good stuff. All right. Should we get back to your presentation?
Yeah. So just the last person on here is a bookkeeper, right? And, I think bookkeepers might not have the same sort of like professional certification as these other folks, right? You don't need a license to be a bookkeeper or call yourself a bookkeeper. You need to be a licensed insurance agent, and you need to be, a BARD attorney or whatever you might call it for attorneys, and a licensed financial planner and licensed CPA and EA, right? But anyone can call themselves a bookkeeper. So I think this is really where you need to find, okay, Does this person come personally recommended, right? What are their reviews like? What are their capabilities? What is it that they're offering? How do they work? Like, do they have a real plan for how they work? Can they tell you how they work? Can they give you examples of how they've helped other people? And they don't need to be a real estate specific bookkeeper. I think that can help certainly as you build a larger team. You are going to need that. You're going to need that sort of like expertise. But they can be just a really, really sound professional who knows what they're doing, who knows how to reconcile and balance things, and who is not threatened by working hand in hand with your whoever is doing your tax prep. Right? Even if they're in two different firms, that's totally fine, but they should be able to collaborate very, very well. And make sure that there's not there. I've just seen weird scenarios where there's a lot of ego on one side or the other, and then there's like butting heads, and you're just forgetting about the client because you're both trying to like prove that you did the accounting correctly. And it's very strange. So those are some of the characteristics you're looking for in a bookkeeper.
That's great. Good tips.
Okay, and then yes, this one is just be a great client, right? So think about an ideal client for you, an ideal client for your real estate business. You want to be like that for the professionals that you work with, right? And I think informed, collaborative, responsive, and cheerful. I threw that one in as well. It's really nice to not like get bashed over the head all day when you're dealing with like taxes and high stress situations. Just like try and have a good outlook on it. This doesn't mean be a pushover, right? In no way, shape, or form should you tolerate crap from any of the professionals that you hire, right? This is not saying like, oh, be really nice and they'll treat you really nice. No, you might have to have very direct conversations with somebody. You might even have to have a conversation where you end the relationship, right? But leading up to that point, a really strong relationship is one that has a lot of mutual respect, and there's a lot of collaboration, and there's a lot of communication, frankly, right? And you should be I said this before, but like you should be curious, right? You should be asking questions. You should be trying to get to the heart of what the tax strategy is, the heart of why bookkeeping is done a particular way, and not just be like, oh well, I gave it to them. If they mess it up, it's their fault. That is not a recipe for a good and long-term relationship. All right, so now we're getting into some of like the more specific stuff. I know that we don't have all of the time in the world. What was the general thought, Shelley, on sort of timeline?
You have about 60 minutes allocated, so I'd say another 10 minutes or so, and then we'll do some questions and answers. But it sounds like we're answering a lot of these questions as we go. So let's just keep rolling. We're good.
Yeah,
we're
so
good on time.
We'll try and get through these a little faster.
Yeah, and so we just know people are still out there watching us. If you want to like give us a thumbs up or anything in the chat, that would be pretty awesome, just so we know you're still out there. And if you have those questions, pop them in. We'll make sure to get to them.
So yeah, so what is what is deductible? And I said it before, like there's not a lot of difference between real estate agents and other business owners, but some of the things that I get questions about kind of constantly, and we can go through it, is so meals with clients, right? So if I go out to a meal with a client, is that deductible? Half of it is deductible, right? There was a time a couple of years ago with COVID where it was temporarily 100% deductible. It's no longer 100% deductible. It's 50% deductible. Client gifts. This one is like very thorny, but client gifts are anything that you give to a client that's not like a piece of advertising, right? You couldn't like justify it as like truly a piece of advertising with your brand. So if you have like if you have a blanket that you give to every like client who closes a house with you and it's got like your logo, stitched in, yeah, that's like, you can call that a piece of advertising because it's going to stick around and it's going to have your logo on it forever. But if you're giving them a really nice bottle of wine, that's technically a client gift, and you have a $25 limit on the deduction per person per year for each gift that you give, right? So you could give $100 worth of gifts to somebody in a year, and you would only be able to deduct $25 of that. So that's just something you have to be mindful of. Client entertainment. So this is like bringing somebody to a baseball game or, to see a play or something like that. It's not deductible. 0% deductible. Now, if you pay for their meal at the baseball game or, at the show or whatever, you can deduct that. You can deduct 50% of that cost. But client entertainment is not deductible. Dues for like your country club, or like your, I don't know, local chapter of runners who meet up, twice a week to go running, and you get a lot of business from there. It's not deductible, right? It might have a business purpose for you, right? It might actually be the right thing for your business to spend those dollars, but it's not deductible. Dues that are deductible are things that are directly related to your particular, right, to doing your job, right? So that would be like, National Association of Realtor dues, right, or local association dues, or even like a Chamber of Commerce dues, right? So like that's specific to business; those can be deductible. Another one that I get all the time is my clothes. I bought a new suit. I bought a new pair of shoes. Whatever it is, whatever your thing is, those are not deductible, right? If you can wear it outside of work and it doesn't have a brand on it, it's not deductible. And so, I think a lot of people will be like, "Oh, my dry cleaning." Oh, no, not deductible, right? There was a time when, before 2017, when the first Trump tax cut bill came into effect, where like there was more leeway with those things, right? Now it's basically all out.
And they change every few years, right? Like how frequently
Yeah,
are we seeing some of these baseline things change?
yeah, and you just have to be, you don't have to be like 100% always looking at every line of the tax code, but generally just be aware of the things that are deductible and non-deductible. And I'll say, okay, what are things that are like deductible? What are just normal, necessary, and ordinary business expenses? All of your advertising expenses, right, for your real estate business, those are deductible. Normal advertising, if you pay for print or online ads or anything like that, that's all deductible. Office rent, that's deductible. Office supplies, those are deductible. We talked already about the home office deduction. If you do that, and you calculate it well, your mileage that you drive for business, that's deductible. So lots of things that are like, they just, they kind of pass the eye test where you're just like, yeah, okay, that sounds right. Those are deductible. These are the ones that are sort of that gray area. Okay, so what about my car? This is another one comes in all the time. I've talked about mileage tracking, but that's only one way to figure your vehicle deduction, right? There's other ways to figure. The other way to figure your vehicle deduction is to track the actual expenses related to the vehicle, right? So these would be things like interest paid on the loan, if you have a loan, all of your gas, your insurance, depreciation on the vehicle if the vehicle is owned by the LLC. Those are the types of things where you would be figuring sort of the actual expenses. But once you purchase the vehicle, you put it into service, you have to stick with the method that you choose, right? You should not be swapping back and forth between, mileage this year and actual next year, and mileage this year and actual next year. Now, it doesn't hurt to do the analysis, but these are the types of things that you should be asking before you decide to go and do something about purchasing a new vehicle or something like that. So the first is like, how long will you own or use the vehicle, right? If you're the type of person who only wants to keep their vehicle for a couple of years and then sell it so you can get a new one, right? Then you probably don't want to be figuring depreciation, right? And things like that. You probably just want to be able to take the mileage, right? Because if you figure depreciation and then you sell it, you have to recapture the depreciation. So I would just kind of avoid that. And maybe that's an argument for, okay, I'm just going to lease this vehicle. because you can deduct the entire cost of the lease based on the percentage of business use, right? So if your lease costs you $10,000 a year, whatever it is, that would be an expensive lease, but okay, $10,000 a year, and 80% of the time you drive for business and you can substantiate that with a mileage log, okay, then you could take an $8,000 deduction for that lease. So that's just one of the things. Another question is like, what percentage of the vehicle use will be for business, right? If it's like mostly a personal car that you might occasionally use for business, just track the mileage, just track the few miles that you might put on it. That'll probably give you a better deduction. How large is the vehicle? This can come into play with, if you're going to purchase the vehicle and try and get bonus depreciation, right? This is kind of a risky strategy, so I would definitely talk to an accountant before you go and do this. That's a consideration. And then just how many miles you plan on using it per year, right? Like, does a lease make sense for you at all? Because if you're going to drive so much that you go over the lease, right? Like maybe you shouldn't do that. One of the principles that I like to think about, and this goes for a lot of things, is when thinking about a new business vehicle, don't let the tax tail wag the dog. And this is really for anything. Don't let the tax tail wag the dog of your business, basically. And basically, like, I see this all the time. People are like, I want to reduce my tax liability. I'm going to go buy something. You're like, okay, fine. But like, so you spent $1 on something you may or may not have needed to get like a 30% like deduction out of that, like a 30-cent deduction on that. That doesn't make sense, right? So don't let tax considerations sort of drive forward your business. It might not be the right financial move for you, whether it's a good tax deduction or not. It might not matter, right? I'd rather have the cash than, have something that I'm potentially not using and getting a little sort of small deduction on it. Someone said, I may have missed the percentage for the branded clothing or branded gifts. Those are 100%. Those are 100%.
Love that.
Yeah. So,
because that's advertising, right?
Yes, brand it.
Right.
Buy things that are advertised. Build it. It's also just good business practice, I think, to just have a system of things that you can just say, like, this is our logo on it. This is what we give to everybody. It's our branded thing. It sticks around. If we pay for our own health insurance, can we deduct any part of that? Yes. So there is the self-employed health insurance deduction. You can get it whether you are a sole proprietor, you're set up as an LLC, or even as an S corp owner. It has to be. It has to be. This is sort of a really weird and complex one. It has to be done with the help of a professional because it's like so convoluted. Like the premium costs have to be added on top of your W-2 as additional income, and then they have to be routed through and deducted on your personal return. It's very weird, but yes. So if you are a single member LLC, sole proprietor, you can and should take the self-employed health insurance deduction.
That was a good tip.
It's for premiums paid, right? It's not for actual costs. That's a different type of deduction and only comes into play in some situations where like the medical costs are so high that they surpass a particular percentage of your income.
It sounds complicated. Where can people find more information about what they can and can't? I mean, is this a conversation with you?
Yeah, I mean, I think that whoever is your professional tax preparer, right?
There you go.
If you really have super high medical costs, like you think you might be eligible to take that as a deduction, you need to definitely find a professional to help you with your tax situation because I don't think TurboTax is going to cut it. So.
Yeah, good call. Good call. Let's take a few more questions, or you have another slide, because we do want to make sure we this. I think a lot of people are going to have questions about LLCs and S corps. So let's run through this, and then we'll wrap up.
I'll try and do this fast. So, so do you make the S corp election? So this is to S or not to S. And I think what people first have to realize is that the The S election is it's a proactive election that you have to make with the IRS, right? You don't go initially to like DC and be like, I want to set up an S corp. No, usually you're setting up an LLC, and then that LLC can elect to be taxed as an S corporation. So these are the questions that we have to go through, and you have to be able to answer these questions before I think it makes sense for you to go down the S corp road. So 1, do you have an LLC? 2, are you approaching about $250,000 of GCI per year? Do you think you will sustain that level of production? Like, is that a one-off, or do you think that's where you're going to be, or higher than that? How aggressive are you with your retirement savings? Right. So some people are very, very keen on absolutely maximizing what they're able to put into like their SEP IRA. S corps can be restrictive of that, so you got to think through that. Do you have a bookkeeper, a CPA, or an EA and payroll company that you trust and can help you execute on this? If you don't have those, if the answer to any of those last ones is no, then do not pass go. Don't set up the S corp. So really the principle is like S corps can bring really good tax savings, but are much less flexible than a Schedule C. Also, if you are based in DC, the S corp automatically puts you into the category of having to pay the franchise tax. For most real estate agents, they can avoid the franchise tax entirely because more than 80% of the revenue of the business is generated by their personal services. So that's just another consideration. If you're in DC, I would look even harder at whether it actually saves you money or creates just more complexity, more cost, and it then puts you in actually a worse tax situation. So I have a couple more things, but I'll stop it there so we can take questions. And I know that our sponsor has to get on as well.
Yeah, we appreciate that, Michael. And this is great because I think that we get a ton of questions about should you formalize, like should you go LLC or S corp as an agent? And I think all those qualifying filtered questions, ask yourself that before you make up your mind. It's great.
Mm-hmm.
And question here, when should you transition to an LLC?
Yeah, I mean, I think as soon as possible. You know, if this is what you've decided to do and you want to, you want to have all the advantages of the LLC, it can own its own bank account. You know, it can have its own EIN. You have the level of anonymity. You've got some liability protection. I don't think you have to wait for like a certain dollar threshold. I think you can just go and set that up. Now, LLCs, depending on the jurisdiction, will have an annual filing fee associated with them. Actually, in DC, it's every 2 years, just because they're complicated. But it's like $300 in DC every 2 years, $300 in Maryland every year, $50 in Virginia every year. So you just got to think about that. Like it costs something to maintain it. But I don't think there's really a reason to wait outside of that, unless you don't want to pay the annual filing fees.
Got it. What other like stewardship and administrative things do you have to do once you do formalize as an LLC? I mean, DC, you have to keep a good hand certificate. There's this what's the foreign filing that everyone was threatened with this year?
Oh, the beneficial ownership information.
That's the one.
Yeah, which was such a stress point for us at the end of the year. We're trying to like scramble and do them, and then you're like, well, maybe So, there's not a ton of things that you really have to do to maintain. You should go jurisdiction by jurisdiction and kind of. They have been getting better at sort of outlining, okay, what is it that you need? But usually there's a difference between opening an LLC and opening up new tax accounts in a state. Those are sometimes they're like the same process, but sometimes they're different. So yeah, I would just say like the big thing is the annual filing fee. And then once you set up the LLC, you also need to get an EIN from the IRS for that LLC. And I think that the other thing that I will say is there are really good online banking options for LLCs now. So the two that I'll mention are Mercury and Relay. Both are really, really easy to sort of like set up and administer. Essentially fee-free accounts for your business, and you can do it online. They've really come a long way.
That's good to know. All right. People are saying, I can see on this side that they love Relay. It's a good one.
Good.
All right. All right. So let's wrap up this individual slide. You have another one here to chat about, and then we're going to bring on Katie and talk through our raffle.
No, let's bring on Katie. I think that's all that I want to hit people over the head with today.
That's a lot. That's a lot of information. I hope everyone was able to pick up some tidbits of how to manage their own business and think about their tax strategies going into it. So thanks very much, Michael.
You're welcome. Thanks for having me.
And guys, keep the questions coming because we'll stick around and answer as many as we can when we're all done here. So let's bring on Katie. Katie, I can see your microphone is muted. Yes, I know that moment where we're all like, you're muted. All right, Katie.
That's not going to work.
All right, ladies and gentlemen, Katie Griffin is a manager and partner attorney with Universal Title. I have known and worked with Katie for years now for my own personal purchases, in addition to majority of my own clients. So Katie they're graciously sponsoring this broadcast for us today, and just wants to pop on, say a few words, and maybe if you have questions for a title attorney, pop them in the chat. We would love to address them.
Yeah.
Take it away.
So I love the idea of this seminar and this coming together to talk about taxes. It's one of those things that everyone feels sort of intimidated by. And I think the more that we're talking about the struggles that we've all had from time to time on this topic, the better. So part of what I wanted to say, just from the title side, when we see people who have been behind on their taxes for any length of time, we typically see the IRS filing a tax lien, and that tax lien gets recorded such that in the future, going forward, if you are selling a property, buying a property, refinancing a property, that lien is going to have an impact on your ability to do the things that you want and need to do. So I would say for anyone on this call, or for anyone who has a client that is in this situation, tax liens generally can be satisfied in two different ways. The first, the one that the IRS wants you to do, is to pay it in full. The second is to apply for the lien to be reduced or removed from a particular property so that you can move forward with your sale or your refinance. What I would suggest for folks that they know that they owe money to the IRS, it doesn't have to stand in the way of what you want to do next with a property that you own. You just want to get ahead of it and start thinking about it early so that you can make the arrangements that you need to release that property from that lien so that you can keep moving.
That is awesome. Okay, sorry, I was taken off the bit.
Yeah.
Are we seeing do we see a lot of properties with tax lien issues, or how often does this come up?
I would say that if it's going to come up statistically, it's coming up for self-employed people. For all the reasons that we have just talked about when you are not a W-2 employee, you don't have someone pulling taxes out for you, you end up in a position where you need to be on top of your own taxes. Makes it hard for folks. So for folks that are self-employed, that's where I generally see people with tax liens recorded against them or recorded against their property. And the IRS, you mentioned already, walking into the IRS service centers are actually a lot more helpful than you would really think that they were. And I think in part, it's something that we can't do for you. The IRS is not going to release information about your taxes to me. But if you can get them on the phone, they will provide a statement to you of the amount of your lien to pay it and release it. And we can follow up on that really quickly and easily as part of your closing. And in terms of how many files do we see that have a tax lien recorded against them, I'd say probably 1 in about 15, somewhere in there. So it's not uncommon. And we certainly know how to work through it when we see it.
We got a question that just popped up. How long does it take for the IRS to put a tax lien on a property?
So what I have seen, I think it varies quite a bit because we're talking about as soon as you have a liability, in theory, the IRS can lien you. But they have their own operations that they are working through. So of course you're going to see that lien pop up more quickly if there's more that is owed. But I'm seeing it typically being in a balance that is outstanding for a period of 6 months to a year before it necessarily becomes a lien. They do want to give you an opportunity to pay it before it becomes a lien. But that is not set in stone, because if it's a large amount that's outstanding, and from a taxpayer who has a fair number of assets, the IRS is probably more likely in that situation to lien it a little bit more quickly.
Interesting.
And they want to get
Any
theirs.
say that again?
They want to get theirs.
Yeah, they sure do. They do. Katie, what else would you like to share with us about, what you're seeing out there in the world, or universal titles helping us out with these days?
Well, so Universal Title does real estate settlements in DC, Maryland, and Virginia. We actually even bigger than that, but I handle the DMV myself personally. One of the ways that we have seen tax liens come up is with our friends in the real estate community, right? Realtors and tax liens, it does sometimes end up going hand in hand because you are self-employed and having to take care of your own taxes. So I think one of the things that's really important when you're dealing with a title company for yourself or for your clients is making sure you're working with one that has those expertise in the resources that you need to get to the solution of the problem quickly. And we talked a moment ago about resources. I got a bunch of them. So it's my hope that if you are looking for someone to help you create your estate plan, or to any sort of the legal needs that you need outside of just the title realm, we usually have someone who can help you with that.
That's great. We're going to put, Katie, your information, including your email and your phone number, in the chat so that everyone can see, reach out directly. Like, Katie is one of the most responsive people I've worked with. If you send a message, you'll get a response. So it's pretty great. And you've helped me out numerous times, our whole team here at Fulcrum.
Well, I'm happy to do it. It is literally my job.
Yeah. Well, fantastic. Anything else to add before we bring Temi and Tom back on to the stage?
No. Thanks for including me today. This has been great.
Oh, well, we're delighted to have you. And Temi and Tom are here. You are both on mute, so don't talk till you unmute your mics. Katie's off already. I was going to say, Katie and Universal Title are sponsoring our raffle today. There she is. They're sponsoring our raffle today, which is the 3-month membership to Financial Gym. So we just really want to thank you, Katie, for being there for us. And on behalf of all of us, thanks to Michael for giving us all of his time and expertise. It was pretty great.
Yeah. Well, thanks for including me. This has been great.
Thank you so much, Katie.
Amazing. Tom, Temi, any final words while we get the raffle ready to go?
Let's do it again.
I think Katie, I think Sharice is going to play a short video from Financial Gym. I reached out to them and asked them if they could send something over that showed a little clip about like what they do, so that people know what they're getting. Again, we just wanted to give this out to you guys as a way to kind of start your year off right, or one special person as a way to start your year off right. So so we wanted to let you know what you're getting, and then we'll do the raffle. Thank you guys. We said the first 30 RSVPs get entered in, and you guys really showed up within 24 hours. We had 30 RSVPs. So thank you guys. So Sharice, could you play the video for Financial Gym? And then we'll do
Here's what to expect from your first visit at the Financial Gym. You'll be greeted by a member of our team. They will bring you over to our famous money bar. They'll ask if they can get you a coffee, a snack, maybe wine. Now is when you get naked. Financially naked, that is. Your financial trainer will ask you about your financial situation. Then we will go over your life goals. think short term, medium term, and long term. After week 1, you'll meet with your financial trainer again and get your customized financial plan. They'll go over everything with you. After month 1, you'll have a check-in call with your financial trainer to make sure you're right on track. After month 3, it's time for your quarterly review. Your financial trainer will provide you with a detailed report so you can see all of your awesome accomplishments. And guess what? You'll get access to our gyms as a co-working space, weekly events, client discount perks, FinGym swag, and local monthly meetup groups. If you don't live near a FinGym location, we can work with you virtually. Ready to get started? Schedule a free consultation call below.
That's freaking genius.
They wanted me to let you guys know they do not like. I think since that video is something they put out like 5 years ago before COVID, so they don't do any more like the in person, but everything is done virtually. That's how I work with my financial coach. So you guys will be, well taken care of virtually. You do not have to go in house. We do everything over they do everything with me over Zoom or Google Meet. Yeah.
Amazing. All right. And Tammy, you were really the heart and soul behind this whole seminar, coming up with we frequently hear people asking questions about taxes and getting overwhelmed as realtors. And you were like, we need to solve this for people. So thanks for putting your heart and soul into putting this. Drop in the chat. What is one goal that you're looking to accomplish this year? And perhaps how, what you learned today could help out with that. And how do we do this raffle? Who's got it?
Sharice has it.
Sharice is having, and Tammy, you're our energy ambassador. So you take this away and with energy announce our winner.
Okay, hold on. All right, so who is our winner? And you must be present. Is Adriana on? Adriana, are you on?
Well, Adriana, we will make sure to reach out to you directly. If you're here, jump it in the chat and we'll see it.
You gotta jump into the chat that you are here. Otherwise, you have to go to the next person, Adriana. So are you here? You have to.
Right, we're gonna give her a moment.
We're gonna give 10 seconds.
Okay, 10 seconds to pop in. And actually, Tom, I'm going to redirect a question to you that I asked for people to drop in the chat. Like, what's one cool thing you're excited about this year?
What's one cool thing I'm excited about this year? From a tax standpoint?
Taxes, business, whatever. It's all related.
Well, I'm pretty excited that I'm doing my taxes right now. And actually, I'm not doing my taxes right now. I filled out a booklet and my taxes are being done for me. And actually, I don't sweat it ever because by the time time comes around, it's already already in the books. We've been doing it for a year.
I love it. So it sounds like you're looking forward to sleeping well at night while your taxes are being managed.
From a tax standpoint, for sure. And then from a market standpoint, I think the market's picking up. Fulcrum, we sell in 20 houses a month. And this weekend, we have 7 open houses a weekend. And this weekend, we had more activity we've had in months. So in houses that we haven't seen a lot of activity, I think the three of us have talked about a fair amount, but we can feel it pretty readily at Fulcrum because we're big enough. But I can feel a change, and I'm pretty excited about where we're going. I got a lot of guys calling us, guys showing up to open houses and showing. So from a market standpoint, just in general, I'm pretty excited about that this year.
Right.
I love to hear that.
Did not post in the comment section, so we gotta spin again.
Okay, spin again. Let's go.
Big money, big money. Who is our next lucky winner? Roger Taylor in here. Roger Taylor. All right, you gotta give us something in either IG or YouTube. Otherwise, you gotta keep spinning. And
all right, pop it in the chat. And so while we're waiting on Roger, tell me what's one big thing that you're looking to accomplish this year?
I actually increased my goals to closing 40 individual transactions, so 40 transactions on my own. The goal was originally 36, but I moved it to 40. 30 listings taken out of that 40, and looking forward to hiring a showing partner this year. So really excited about that. So I don't have a team like when I hire my showing partner goal, but I have 30 listings and 40 personal transactions closed on my end goal that I'm excited about.
I love that. That's fantastic. Right. We're going to give Roger's name a shout out one more time. Roger Taylor, if you are there, we got to see your name in the chat on YouTube or Instagram, wherever you happen to be watching.
All right. Oh, is Roger there?
We haven't seen it yet. Let's see. I don't know. What do you want to do, Tammy? How do you want to handle this?
What Tom is saying, Roger is here. Roger, Tom, is Roger here?
3:00. It's time to move on. Like, if they're not responsive, let's give it to the first person and keep going. I think we're done spinning.
Well, I'm also seeing,
Yeah, we're gonna like there are people who stayed all the way up to the end.
All right, we'll keep going.
To be able to get it. Okay, let's go.
And again, let's have
I'm
it.
also seeing that all the posts are showing up late on YouTube and Instagram. So there's a little bit of delay.
It's like a 30-second delay.
Yeah, there is a delay
on that. They're still showing.
We can do one final spin. Also, Ty's suggestion is that it did fall onto, I'm not how to say this, Camilla or Chamia or whatever, and she's definitely in the chat. So, do you want to do one more spin or give it where it landed?
You said it fell on Chamia. Yeah. Is Chamia on?
Yes.
Oh, Chamia's on?
Yes.
Yeah.
Okay. Chamia's our winner.
Woo!
You said, oh, okay. Chamia, we'll reach out to you. We'll have Universal Title reach out to you to connect you as the winner of this raffle, and you get to walk away with 3 months of Financial Gym membership. Congratulations.
Hey, Cherie, are Michael and Katie still perhaps online? If we can bring them up onto stage, let's do just one final thank you and farewell with everybody. Michael, you are muted at the moment, but we really want to thanks for giving your time and expertise here. You've been such a valued partner for Fulcrum and many of our agents over time. So seriously, thank you.
You're welcome. Thanks for having me. It was fun.
Tammy, parting words?
Are we going to make sure we let people know about our social media?
Go for it.
Oh, I didn't want to. We're planning on having more events throughout the year. So if you have anything that you'd really like us to touch base on, like we are a team that likes to give value to our community. So our real estate community, as well as our client community. So we do events every quarter for our clients, and we'd love to do events that add value to the real estate community, because unless we work together, we're not going to, move forward and progress. So, so if you have any ideas of events that you'd like to see us put on, please let us know. We're constantly looking for ideas to add value to you guys. And please make sure you follow us on Instagram, YouTube, and on Facebook. Yeah, and
absolutely.
You can reach out
Michael,
to any of us on those platforms as well. Sorry.
No, that's great. Absolutely. Please do follow. We're trying to grow our postings and our sphere. So we'd love for you to join us. And Michael, you mentioned you are relaunching a podcast, and how can we find out more about where you are and connect with you on Instagram?
Yeah, so I'm not on Instagram.
Oh, okay. Not Instagram.
I'm a millennial who's not on Instagram. No, so agentmoneypod.com is where we're gonna relaunch. It's on all of the major, all the previous episodes are on all the major podcast hosting sites. And also just go to agentcfo.co. We couldn't get the .com. We don't have that kind of cash yet. And just reach out to me. You can schedule an appointment on there. Just for like a quick virtual consult. I always say I'm happy to basically chat with anybody. If you're in the real estate space and you want to have a chat, I can quickly sort of figure out if I can help or if I can refer you to somebody else. So yeah, definitely just reach out to me on the website or over email, michael@agentcfo.co.
That sounds great. Well, once again, thanks so much for your time. We appreciate it. We appreciate everyone hanging in there with us. And we at Fulcrum, we're always here to support our community. Reach out to us if you have any questions. Hope to see you on our next broadcast. Thanks, everybody.
Thank you.
Thank you.